Yeah, so we can look at the charts here. We can just look at the seasonality chart of the S&P 500. So I believe the S&P 500 may struggle here going into the end of the year. We're really on the cusp of starting a new downtrend. Now, seasonality wise, we generally see the market move higher into the end of the year. Now, it doesn't always work that way, but I think the stock market here is actually starting a downtrend, and seasonality I think is going to help hold the stock market up a little bit. I think the market is equities are still going to fall. And I do think we're going to see money come out of equities, and I think we're going to see it go into gold. And we're kind of here in November, middle of November, which usually is kind of up and to the right for gold as well. And I think what we're going to see here is this a big rotation of money coming out of equities, moving into gold. And if we kind of look back and compare the 2007, which is the left side, the yellow line is the price of gold, which has been chopping around near the all-time highs in 2007 as the stock market started to sell off. Well, we're starting to see the same thing. We've got gold chopping around right now on the right-hand side. This is today, like where we are now, the weekly chart of the S&P 500. The equities are starting to struggle, and I believe we could see equities have a fairly decent pullback. I mean, obviously, it's really hard to pick a top and figure out where that market is going to be. But, when you look at it from a big picture standpoint, not much has changed in my kind of opinion of where we're at. I have a somewhat of a bearish looking outlook. The stock trends have been trading higher. We have been riding the market up. But overall, the market isn't that strong. The Magnificent Seven have been doing a lot of the heavy lifting. The small caps and the micro cap space over the past couple of weeks have kind of broken down. They're showing signs that they're starting a downtrend. The S&P 500 and the NASDAQ look like they're starting a new downtrend this week. And it could be a fairly precipitous pullback. So that's the big thing right now. And, when we, step back and look at gold as well, gold has been telling us that something is wrong in the economy and the global system for a long time, for a couple of years. Stocks and gold have been rallying together. And I think we're very close to the stock market starting a bigger pullback, potentially 10, 20% here. And we could see precious metal space rally up, kind of like what we saw in 2007, 2008. I think gold and silver have got a very nice opportunity to the upside. The stock market is on the cusp of a real wake-up call for individuals. And the big question is when the market does roll over, do you have a game plan to not only profit or avoid the crash, but to profit from it as well in equities? Because I think it will be pretty dramatic once the music does come to an end at some point.
Zooming in, the signals are multiplying. The usual market leaders are doing the heavy lifting while breadth is narrowing. Small caps have begun to falter. Technical setups suggest key indices, including major benchmarks, may be topping out. Meanwhile, uncertainty is rising around monetary policy and economic data. In fact, recent volatility and macro concerns are heightening the risk of a 10% to 20% pullback in the equity markets. This is not simply a correction of a few percent, but the kind of move that could reset sentiment and positioning.
Yeah, so we can look at the charts here. We can just look at the seasonality chart of the S&P 500. So I believe the S&P 500 may struggle here going into the end of the year. We're really on the cusp of starting a new downtrend. Now, seasonality wise, we generally see the market move higher into the end of the year. Now, it doesn't always work that way, but I think the stock market here is actually starting a downtrend, and seasonality I think is going to help hold the stock market up a little bit. I think the market equities are still going to fall. And I do think we're going to see money come out of equities, and I think we're going to see it go into gold. And we're kind of here in November, middle of November, which usually is kind of up and to the right for gold as well. And I think what we're going to see here is this a big rotation of money coming out of equities, moving into gold. And if we kind of look back and compare the 2007, which is the left side, the yellow line is the price of gold, which has been chopping around near the all-time highs in 2007 as the stock market started to sell off. Well, we're starting to see the same thing. We've got gold chopping around right now on the right-hand side. This is today, like where we are now, the weekly chart of the S&P 500. The equities are starting to struggle. And I believe we could see equities have a fairly decent pullback. And if we go back and look at 2007, you'll see the stock market ended up dropping about 20% and gold shot up about 30%. Silver shot up around 60%. Platinum, palladium also up about 60%. So there's some pretty good potential when if the stock market does start to sell off, Danny, we're going to see that, I think, that money flowing out of stocks, and money's always looking for return on investment. So it is going to go to whatever is working. And of course, I think we're in this sweet spot that gold, silver, and precious metals complex as a whole is going to really absorb and suck up all of that capital and send it higher. So we are very close. So you said runway. I think the stock market is potentially putting in a top here, or only has a month or so left. I do think come January, I think things could get really ugly for equities. I do think it'll continue to be strong for precious metals for maybe a month or so, but there's not much runway. I feel like we're right on the cusp of the stock market making an all-time or a major market top before we start a recession or some bad news hits. And I think gold also has the same. It's a month or two away from topping, but stock market, not much upside. The precious metal space, I think, has quite a bit of upside.
Enter the non-equity side of the story. Precious metals, particularly gold and silver, are flashing alerts. A long period of co-rising with equities is breaking. Gold is gaining strength even as stocks show strain. Recent data show gold surging to fresh highs above $4,000 per ounce. Institutional demand and central bank buying are accelerating. The thesis here, if stocks roll over, capital may rotate into safe havens, sending metals sharply higher, reminiscent of past stress cycles in 2007 or 08.
It'll take us up to about for gold, it'll bring us up to about $5,100 for gold. As silver, I'd have to look at it. Silver would be, it's roughly about a 60% move. So we could just quickly grab from where we are right here. Mm-hmm. So, I mean, we're talking way up, 80 and change here to the upside. So this is a pretty big move. I mean, I talked about $82 silver a couple of years ago, saying, if things were to blow off, that's kind of where it could go. And that's potentially showing where it could go if this similar type of situation unfolds. Now, you mentioned earlier, maybe there's a double top in metals here. We saw silver come up and get rejected a little bit. I think in the grand scheme of things, this is just a hiccup. And I think we're still going to see a very big push higher. I think this is a consolidation. I think we're going to see silver ramp itself higher. Same with gold going forward. But again, you have to have a game plan. If silver was to start to break down and break this low around, $45, you might not want to be holding it because it could unwind in a pretty big way. Silver has had a strong parabolic move to the upside, which you can really see when you drop down to the monthly chart, which you and I looked at last time we were talking. We can go way back even further. When things go straight up, they like to come straight back down. So that's what concerns me. But there's potential here, obviously, for silver to have a much bigger spike, because I do believe we're in the best scenario for precious metals to have a move than we've ever seen before. Now, every year the case for that gets stronger and stronger, but this time around it feels, central banks accumulating, and there's just a lot more, I think, power behind this potential move. So I think the precious metals space is going to be pretty exciting. It's just, you need to be ready, because when it does reverse, I think we could see a fairly strong pullback we could see 30-35% pullback in gold. We could see potentially a 50-60% pullback in silver when the markets do potentially run out of steam, when these little rocket ships going straight up eventually turn around and start coming back down.
That's pretty big correction. I mean, that's a crash by definition, is it not? 50 correction.
Yeah, there's no doubt. I mean, but that's what silver does. Like if you go back, you look at these other parabolic moves, they fell, 88%. The one in 2012, depending where you want to go, 70%. So I mean, silver is volatile. So
history offers useful parallels. In the 2007-2008 period, as equities peaked and rolled into freefall, gold and silver soared. By some measures, gold rose, March 30%, silver 60% in that environment. If that pattern were to repeat, the upside in precious metals is significant. Current structural drivers, central bank accumulation, de-dollarization, safe haven demand, may provide even stronger fuel this time around. Yet the analogs also warn, sharp corrections can follow big upward moves. Having a game plan is as essential as identifying opportunities.
Possibly. I mean, I wouldn't call it a cup and handle. I would call it a cup and handle cup and handle should be something more like this, like like this is the biggest handle ever. It's a 2-fisted. It's a heavy beer mug.
But if you do it on a log scale, it looks a little bit more
True.
apropos.
Yeah. True. Anyway, yeah, there's no doubt, but what goes straight up can come back down very quickly. I mean, you could say this is a 40-year pattern. Well, the right side of the cup fizzled out in 2 or 3 months, or the left side of the cup and the right side of the cup took, depending how much you want to look at it, took a couple months to a year and change, or a couple of years to fizzle out. I don't like to look at 40-year patterns because I don't want to wait 40 years for the other half of the pattern. I want to follow shorter term stuff. I'm already long enough outlooks for a lot of stuff already. People want like daily stuff and weekly trades. So like this, you will grow old following this pattern. And it takes a long time to confirm anything. I mean, it helps. I think the governments, they're doing all kinds of stuff to kick the can down the road. I think investors, the average individual, like in the United States and Canada, in most places, are not financially very well. Like there's a huge, obviously, divide between who has money and who doesn't. And so they're doing everything they can to drag out, 50-year mortgage, it drops the mortgage rate. So people can now afford really expensive homes, giving away free money helps people pay off some debt or make more debt, unfortunately. But yeah, I mean, I'm not a fan of what's going on. I think it's just a matter of time before we see all this implode. There's only so much I think they can just keep giving away and changing. Typically, we see a lot of these changes, like 50-year mortgage, 15-year car loan, and usually they're trying to do this just before something breaks. And so I think we're very close to something breaking. If they're going to these measures to try to cover things up and stretch the dollar out more so people can afford things when, most people are struggling, it's not a good sign. So I'm a little concerned how all this is going to play out. And I think that's, in the precious metal space, I think that's why we're seeing metals do so well, and gold bugs are excited because, the perfect storm is brewing for the financial system, the banking system. I think now the banks more so I don't know if they can go bankrupt. I was reading something the other day. I don't go too deep into it. I just don't trust them. I just don't trust the financial system, period. I just trade in and out. I like physical metals. You just never know how all those details, they change the calculations for the economic data. So like if we don't even know when the new number comes out with the changes, like, is it better or worse than before? Everything's just murky, right? It's clear. Everything's as clear as mud, and we're all just feeling our way through it. And eventually something's going to break. And so we have to have a game plan that, hey, if something breaks, you better know what to do, when to sell, what to buy, where to move your money for safety.
Given the stakes, strategy matters. On the equity side, the imperative is not just risk avoidance, but active preparation, knowing exit points, hedges, and alternative allocations. On the metals side, the opportunity is vast. Forecasts point to substantial upside for gold and silver, but so are the risks of volatile pullbacks. For example, while some bullish forecasts point toward gold in the US $5,000 region, they also caution that sharp corrections of 30% plus are possible post-run-up. Discipline, asset allocation, and scenario planning become key.
Yeah, I think it is. We've seen the dollar fizzle down. It's carved out what looks to be a bottom. It's now, on the verge of actually having a really nice, real breakout here. It's got a series of bull flags. I think we could see this kind of ratchet its way up. And I could see the dollar index going back up to like 110, 116, 121, like huge moves that we haven't seen in a very, very long time. If that happens, that means probably the stock market and the economy is kind of falling apart. Eventually, once the dollar does start to rip higher, it's going to put pressure on commodities like gold and silver. They'll probably pull back with a strong dollar. So this is definitely a warning sign. I mean, this is, if we go back and compare 2008, if we actually go and look at what happened, if I could find, what am I looking at for here? If we look at the dollar back in that time frame, you look in 2008, the green line, the dollar was out of favor. Everybody was thinking currencies were going to collapse. The dollar collapsed. If we look at the right-hand side of where we're at now, we look at the dollar, is very similar in terms of, I can get it to show here. The dollar's, it's gone all the way down to the right. It's everybody hates it. It's low in value. And eventually, if the dollar does start to scream higher, we're going to see stocks in gold fall. And you know, if we go back here, if you look at the stock market in the background in 2007, it fell like 55%. Well, eventually the dollar put in the bottom and it rallied really dramatically. And the big rally in the dollar put some downward pressure on gold. And I feel like we're going to see something similar to that. I think the dollar could still struggle and bottom here for a while. I think gold could shoot higher, but eventually, I think you're right. I think the dollar is going to come to life here, and put in a pretty big rally and catch a lot of people off guard. I don't know. So many people hate the dollar. It's like probably the most hated currency, I think. And everybody says it's going to crumble, but every time they think that, there's usually a sharp turning point in price, and it goes the opposite direction.
Beyond individual markets lies the broader system. Weak labor data, stretched valuations, and monetary fiscal policy all raise alarms. The U.S. dollar's behavior is central. If the dollar reverses and strengthens, that could pressure commodities and metals. Conversely, a dollar-driven run could hit equities. Meanwhile, central bank moves, inflation risks, and geopolitical stress are layering more uncertainty. Ultimately, the window for upside in equities may be closing, while the runway for precious metals upside appears open. But as always, timing and execution will determine whether this becomes an opportunity or a cautionary tale.